Every once in a while, a voice cuts through the noise of the market. Someone who isn't hyping a meme coin or promising overnight riches, but instead talks about cycles, structure, and patience. Patrick Bet-David is one of those voices. He's built businesses, studied markets for decades, and understands that every boom has a pattern. Recently, he said something that caught the crypto world's attention, his take on XRP and how it fits into the next great wealth cycle. And whether you agree with him or not, what he said changes the way people should be looking at this market. Welcome back to Crypto Equation, where we break down the logic behind the noise and uncover the real signals shaping the future of money. Today we're going to talk about Patrick Bet-David's shocking comments on XRP, what they reveal about where we are in the current market cycle, and why understanding these cycles could be the difference between surviving the next few years or building generational wealth from them. For the past decade, XRP has been one of the most misunderstood assets in the world. Critics dismissed it as the banker's coin, traders called it slow, and regulators tried to bury it. But through it all, Ripple kept building, and now, after years of groundwork, the entire market is finally waking up to what this company and its native asset actually represent. Patrick Bet-David didn't make his name by following hype. He studies macroeconomic patterns, long-term adoption curves, and how money truly moves. So when he mentions XRP in the context of long-term valuation, you should listen. Because his point isn't that XRP will hit $1,000 tomorrow. It's that assets like this are positioned for exponential repricing once the next cycle matures. To understand what he means, you need to understand how wealth creation really happens in crypto. Every major cycle follows the same path: innovation, accumulation, speculation, and consolidation. The few who recognize the pattern early are the ones who capture 90% of the gains. Right now, XRP sits at the edge between accumulation and utility. Ripple has survived the regulatory storm, earned legal clarity, and built partnerships that most people haven't even noticed yet. But the market still prices it, like it's 2018. That's why long-term thinkers like Patrick Bet-David see something others don't. He looks at the market through the lens of history. He knows the internet followed the same path: early fear, middle phase chaos, then late stage adoption. The same thing happened with gold after the end of Bretton Woods. The same thing happened with tech stocks in the 90s. And now it's happening again, this time with digital value networks. The logic is simple. Each new form of value transfer goes through the same emotional curve: first ignored, then mocked, then fought, then inevitable. XRP is sitting in that inevitability zone. The lawsuits are over, the partnerships are real, the technology is proven, the rails are built, and yet the price still reflects disbelief. That's why Bet-David's comments matter. He's not predicting hype, he's predicting recognition. The recognition phase is where patience pays off. When markets move from disbelief to acceptance, the repricing happens faster than anyone expects. The question isn't whether XRP could hit $1,000 overnight, it's whether it can become so essential to global liquidity that the market is forced to value it differently. And that, according to history, always happens when utility collides with scarcity. Ripple's on-demand liquidity already connects more than 70 countries. Their partners move billions every year, and adoption is accelerating. But here's the thing: these integrations happen quietly. Banks don't announce liquidity corridors on Twitter. They just flip the switch. The public won't realize what's happening until volume data starts showing massive on-chain flows. By then, the repricing will already be in motion. Patrick Bet-David understands this because he's seen it before. He watched how people laughed at Bitcoin at $200, then at $2,000, then at $20,000. Each time the cycle matured, disbelief turned into panic buying. The same pattern will repeat with XRP, but with one major difference. This time, the demand won't come from retail investors chasing profits. It'll come from institutions needing liquidity. That's what separates XRP from speculation. It's the infrastructure layer of the new financial system. Once utility is priced in, you can't unsee it. Bet-David's framework for understanding crypto is built around long-term valuation cycles, not hype spikes. He knows that every great investment moves through phases of recognition. Right now, XRP is still trapped between its technological maturity and its market immaturity. But once those two align, the correction will be violent, in the best possible way. He's not saying XRP will hit $1,000. He's saying that in a world of multi-trillion-dollar liquidity, it could. And that word could is everything, because it's not based on fantasy, it's based on math. The total global liquidity system moves over $150 trillion a year. Even a fraction of that flowing through Ripple's network changes everything about XRP's valuation model. It's not about guessing a number, it's about understanding scale, and the scale is staggering. If you zoom out, you'll see that every asset that became foundational to a system was once undervalued because people measured it with the wrong tools. They tried to value the internet using telecom metrics, they tried to value early Bitcoin using stock metrics, and now they're trying to value XRP using crypto metrics. That's the mistake. XRP isn't competing with coins, it's competing with systems. Ripple's entire model is to replace outdated payment infrastructure, not to win a popularity contest. Patrick Bet David sees that clearly. He's not emotionally attached to any coin, he studies business models. And Ripple's business model is the bridge between traditional and digital finance. That's where the real money is moving. Institutional players don't care about hype. They care about reliability, compliance, and liquidity. Ripple offers all three. Once the world realizes that this network works better, faster, and cheaper than SWIFT, the shift will be irreversible. That's the foundation of the argument Bet David was hinting at. He's not selling a dream. He's describing an inevitability. XRP doesn't need to be loved. It needs to be used. And once it's used at scale, the market will catch up to reality. That's what the $1,000 conversation is really about. Not prediction, mechanics, not hype, function. It's not about if XRP hits a certain price, but when the system needs it to. The moment liquidity demand surpasses current circulation, the market will have to reprice XRP to sustain flow. That's not speculation, that's a rule of economics. Every network that reaches global utility forces its asset to reflect the scale of what it supports. The internet forced bandwidth to scale. Cloud computing forced storage to scale. Global liquidity will force XRP to scale in value. Patrick Bet David's insight isn't that XRP is destined to hit a magic number. It's that markets always misprice innovation before it becomes indispensable. Right now, we're in that mispricing stage. Retail investors are exhausted, the media is distracted, and regulators are finally stepping aside. That's the exact mix that precedes the next great market rotation. Institutions are watching, they're waiting for confirmation of what you already know, that XRP works. Once that confirmation arrives, capital floods in, and retail investors will say, it happened so fast. But it won't be fast. It'll just look that way because nobody was paying attention to the buildup. This is what Patrick Bet David meant when he said most people misunderstand how wealth is created. It's not about catching hype, it's about recognizing structure. He sees XRP as part of a larger macro trend, the digitization of everything. We're moving into a world where assets, currencies, and contracts all live on ledgers that talk to each other. Ripple has built a translator. XRP is the language. When the system needs to communicate at scale, value flows through that language automatically. It's not a matter of belief, it's a matter of function. The world's financial infrastructure is outdated, fragmented, and inefficient. Every major economy admits it. Ripple built the fix. That's why Bet David's comment hit so hard, because he framed XRP not as a coin, but as a utility protocol that could eventually underpin the entire liquidity web. When you look at it that way, $1,000 stops sounding crazy and starts sounding conservative. But the key word is time. This isn't an overnight story. It's a structural revaluation that unfolds as adoption compounds. Most people won't wait that long. They'll sell early, move on, and later wonder how they missed it. The pattern is timeless. Early investors always underestimate how long transformation takes, and then they overestimate what they can do after it's complete. The winners are the ones who simply stay aligned with inevitability. XRP's inevitability is becoming harder to deny. Every corridor that opens adds volume. Every bank that joins RippleNet validates the model. Every CBDC pilot that uses Ripple's tech builds credibility. The system is knitting itself together quietly, like a web tightening around global liquidity. And one morning, when enough connections exist, the world will wake up inside a new financial network without even realizing it crossed over. That's the moment Bet David was describing. The instant when adoption becomes invisible because it's everywhere. The market will rush to catch up, but by then the repricing will already be underway. Think about how the internet changed value perception. The companies that built the pipes, the Ciscos, the Amazons, the Microsofts, didn't explode in value because of hype. They exploded because the world couldn't operate without them anymore. XRP will follow that path. It's the connective tissue for value, not information. And when value flows nonstop, the asset that powers that flow has to be worth enough to sustain it. That's how fundamentals rewrite valuation. The $1,000 conversation isn't about greed. It's about function. It's about what happens when trillions move through a finite asset. Patrick Bet David understands cycles. He knows markets oscillate between emotion and reason. between under and overvaluation. Right now, XRP is sitting in the valley of undervaluation, priced by emotion, ignored by mainstream finance. But when reason returns, the numbers will catch up to the network. That's when conviction becomes wealth. The final move of this cycle will be psychological. The same people who doubted XRP for a decade will suddenly claim they always believed. They'll rationalize it, saying, well, it was obvious once the banks adopted it. But it wasn't obvious. It was inevitable. Those who recognized inevitability early will already be positioned, while those waiting for proof will chase what's already gone. That's how cycles close. Patrick Bet-David's strength is perspective. He's not a trader chasing candles, he's a builder who studies systems. When he says XRP could be positioned for a multi-decade revaluation, he's not guessing. He's mapping history onto the present. He's seen how capital markets evolve when technology reshapes the rules. Ripple's model isn't speculation, it's infrastructure. And infrastructure always wins in the long run because systems can't function without it. That's why his words carry weight. He's connecting the dots that most ignore: regulatory clarity, institutional adoption, macro liquidity, and a fixed supply asset. Each one by itself is powerful. Together, they're unstoppable. The biggest mistake investors make is thinking they'll have time to react once they see confirmation. They won't. When the liquidity switch flips, the price won't rise. It'll reset. You can't build conviction after the fact. You have to build it now, when everyone else is distracted. That's the opportunity Bet-David was hinting at, the quiet window before recognition. He wasn't saying, buy XRP because it's cheap. He was saying, study it because it's logical. Logic always outlasts noise. Look at the fundamentals. Ripple is working directly with central banks, integrating CBDC pilots, expanding corridors, and onboarding institutional partners faster than ever. Each move aligns with the global shift to digital finance. None of this relies on hype. It relies on necessity. When necessity meets readiness, the result is exponential. XRP is ready. The world is nearly there. The rest is patience. The next few years will define the next few decades. There will be volatility, there will be fear, but those who understand structure will hold through it because they know the math, they know the trend, they know the blueprint, and they understand that one day people will stop asking, when will XRP move? And start asking, how did we not see this coming? That's the moment Patrick Bet-David was pointing toward, the realization point, the place where preparation meets inevitability. By then, it won't matter what influencers say. The market will have already decided. And it always decides the same way, with math, not emotion. The future of XRP isn't a dream. It's the logical outcome of a global system that demands speed, efficiency, and interoperability. Patrick Bet-David's insight is a reminder. The smartest money doesn't chase movement. It anticipates necessity. And necessity always wins. So ask yourself, what will the world look like when every major payment rail connects through Ripple's network? When liquidity is instant, compliance is global, and the bridge asset that makes it possible has a name, XRP. That's not fiction. That's the direction everything is moving. You don't have to believe it. You just have to watch. Because the cycle is already turning. This is Crypto Equation, reminding you that markets reward preparation, not reaction. Patrick Bet-David just gave the roadmap. It's up to you to follow it before the rest of the world realizes he was right all along. I'll see you in the next one.